Hello everybody, it's my first podcast I'm doing on YouTube here. Today we're going to be talking about financial advising. I'm a financial advisor, Al Costanzo. I'll tell my story in another episode, but today, typical format, we'll be going over some current events and what's going on today. After that, we're going to go over some financial planning, choose a topic for the day, and get into it. So, to get things started, and what's been really interesting today, currently, is the stock market has had a really good year so far. So the S&P 500 currently today is up year to date, pull up here, 20% on the dot year to date today. So the market's really moving in an upward direction where a lot of people in the beginning of the year did not think that was going to be the case. So as things start to move in that direction, people are starting to see some negatives in the economy that could lead to a stock market holdup currently today. Now, the big thing that we're looking at right now is the banking industry. Interest rates have skyrocketed super high over the last year and a half. The Fed just raised rates again last week, probably going to raise them again a week from today. Now, if that happens, and we're looking at this, a couple of things can go down. Essentially, we could go up again on the interest rate side, and then we start going down by quarter one, quarter two in 2024. Or rates continue to go up. Inflation doesn't really stop like we think it will, and the Fed has to keep raising rates or just keep rates really high for a long period of time. A couple problems can lead to that, and that's what's not priced in today is those problems occurring. So for a lot of people thinking, hey, we're out of the storm here, not exactly. It really hasn't started yet. And what I mean by that, when you look at the economy today, we're not facing any sort of recessionary environment currently, but we're starting to see trends of these things starting to begin. So a couple of things you want to look out for is unemployment. Unemployment still very low. So when you look at unemployment numbers today in the U.S., right now they're still relatively low. We're not seeing a bunch of layoffs happen, but the last 2 or 3 months, this has gotten bigger and bigger. And I'm seeing on my end with current clients losing their jobs or being forced to relocate, stop working from home. That is a new trend coming out. So it's not layoffs, but people will be losing their jobs because they don't want to move. Some people that live in Miami have to move to Dallas or Atlanta or the company headquarters because they're working from home the last 2 or 3 years, got promoted into leadership, and now they have to move. Many people don't want to do that, especially if they have kids. And if we see that across the whole entire scale here, it can make a very big impact on what's going on today. Right? And this all can lead to an economy that is a little fragile today. And right now, we see unemployment start to go up in combination with higher interest rates, student loans, right? Interest begins September 1st. We've got a month. Interest starts accruing on all student loans in September. The first payment is going to be in October. For some people, that could be an extra $400 or $500 a month they're not currently paying today that gets added on to this situation. And on top of that, right, if you add on a job loss, they lose their job, you're looking at a mess when it comes to the economy, and that's going to crash consumer spending, which in turn will hurt a lot of stocks in the stock market today. So that's what we're currently seeing. Now, granted, that might not all turn out that way, but it's looking like it's going in that direction. And the question is the stock market priced in for that or not? I think it's more priced in where the Fed's going to save us again, and they're going to lower rates when things get tough. I don't see that happening. I think the Fed is really hawkish, and they're going to make sure that rates probably stay where they are or go up until inflation is completely decimated. We haven't seen that yet today, so we'll see what happens there. Now, with the student loans starting soon, that kind of brings a whole other issue into it. People talk about the real estate market. Well, rates are really high. It's more expensive to buy a home, right? Plus, taxes have gone up, insurance has gone up across the country. I'm in Florida. Insurance has doubled in a lot of cities here, where as that happens, your cost of living is increasing, and then you get a student loan that bumps you up even further, right? Then you lose your job. Now you can't pay your mortgage. What comes next? Well, we could see some foreclosures happening in the housing market. We haven't seen too many, and it's not going to crash the housing market. I'm very, don't want to say the market's going to crash in the housing side, and I don't think it will. Supply's too low, but we might see an increased supply if some foreclosures do start happening, and people having to sell, not being able to wait 30 days and having to sell for a discount. You might see that happen there. It's not going to be on a super large scale like 2008, but it could very well happen on that end. So when looking at what's going on today, from a financial standpoint, from an economic standpoint, a couple key factors is the Fed, whether or not they keep raising rates or not. How does the student loans actually affect the consumer? Is consumer spending going to drop, right? And if that does all happen and unemployment kicks in, right, we're looking at a mixture of things that could lead to a not very good economy. And that's what we're seeing today, okay? Now, the stock market itself, if this all happens, could definitely take some hits. Right now, it's looking like it's invincible, right? If Fed keeps raising rates, stocks keep going up. But I think a time will come here where a lot of these tech stocks, especially these really high PE ratios, might be facing a little bit of a pullback going forward. And again, this is all speculative on different things happening. Something we want to look out for overall. Now, the other thing too, when talking about interest rates, banks are super tight on lending. So the bank lending environment has gotten super strict. So businesses, if we're into real estate, are being very tough on their lending, which does hurt the economy as a whole. There's not enough money going around like it was 2 or 3 years ago. You got a loan for 3%, no problem. Now these interest rates are high, and the banks aren't so willing to give them out because they are struggling themselves on their balance sheet. So with all this going on today, the question becomes, what is the stock market going to do? I think we're looking at somewhat of a pullback a little bit from where we are today. It might keep going up the rest of the year, then next year not so great. No one knows the timing of it, but I do see the economy starting to retract, which is what the Fed wants. They want the economy to retract so we lower inflation. And I think we're going to start seeing that going forward here. Interest rates going up like this does have an effect on the economy, and the Fed knows what they're doing. They're trying to crash the economy to stop inflation. Now, going along with that and kind of going forward, there's a couple of key items too when it comes to financial planning, right? So when it comes to financial planning, a lot of people ask me questions on what are the best ways to save, what are the best investments, how do I know if I can retire? And one of those key questions I get that people don't even think about it till they go to start taking money out of their 401ks is taxes. And that's going to be our first topic today. First topic of the podcast so far is tax planning around retirement. It is not talked about enough, and it should be. So when it comes to tax planning, there's a couple of things to know. One is your 401k is going to be taxed unless you did a Roth 401k. You've been pre-taxed in there, and when you take it out, it's going to be after taxes. Key to know, right? So you're going to be paying all these taxes in your retirement if all your money is in your 401k. Most people in their 60s, I would say this is kind of the case. Most people have most of their money in a pre-tax account. And as that money comes out, they're going to be paying ordinary income tax on that, right? Then your Social Security, depending on your income level, that will be taxed as well. Now, if you make under like $40,000, it's a 0% tax on your Social Security. But once you get over there, there's certain margins you hit where you get the 50% gets taxed, then you get to 85% gets taxed. And people don't realize that either. So if you're living on your Social Security and your 401k, most of that money is going to be taxed. Now, there are solutions to this, and a lot of it comes with saving, how you save earlier on. So we'll talk there first, and then if you are close to retirement, there are solutions to reduce your tax bill there as well, but we'll get there. The first thing is when you start saving, what should you do? And the key here is diversification. I mean, diversification in investing, I get it. Choose different stocks, different ETFs. You should do that, but it's not as important as diversifying where you save your money. That is more of an impact. And for most people, instead of saving it all in the 401k, you should do a Roth account. You should do a brokerage account. Right? You should use other accounts. If you're strictly just doing stocks, not real estate or anything else, you should be in different kinds of accounts going forward, because then you could actually have a game plan to how you might want to retire later on. Meaning you pull X amount from the 401k 1 year, X amount from your brokerage, X amount from the Roth. These are all things that you can do. But if you have all your money in one account, you're not going to be able to do that. It's just not going to happen. Now, on the other side, right, so how do you do that, right? Roth account, brokerage, 401k, do a mixture of it. And what that mixture should be is really based on your personal scenario of whether you make a lot of money today, maybe do more in the 401k. If you're in a lower tax bracket, you should do more to the Roth, right? Maybe most of your money wants to go to the brokerage because you want to retire earlier than 60 and you want access to that cash. Different reasons for different things, but all things to keep in mind. And I definitely think diversifying there can make a really big difference. The other thing to look at is if you are retiring tomorrow or next year and you're like, oh geez, most of my money is in my 401k, how do you get around that? A couple options. One, right, you could do Roth conversions. Now, Roth conversions, we'll talk about next time in the next podcast episode more specifically, can be a good way to help reduce your tax bill, but you have to plan accordingly, right? Because you're still going to pay taxes on that money, no matter what. But the key here is you can do a Roth conversion, and with rates being where they are today, there is some possibility of doing Roth conversions and not spending as much on your tax bill as you may think. Now again, we're going to go over that more next time in detail on how that works, but there is a way there. The other thing is if you do have some other income sources, plan on using those around that. Right? So if you have a smaller Roth you built up over the years or a smaller brokerage, or you have your house that you might sell and downsize, planning around all that is key, right? Now outside of that, there's not too much else you can really do. If you're 65 retiring tomorrow with $1 million in your 401k, you can't just all of a sudden not have the 401k and not pay taxes on it. It's not how it works. But with a proper game plan on the income side, you might be able to figure out how to keep yourself in a lower tax bracket certain years and plan out your vacations a certain way, where you take money out. It's all part of a good financial plan that you have to look at there to make sure that you're paying the least amount of taxes possible throughout your retirement. And if you can get in a space where you could pay a little amount of taxes, that's a big advantage you have in retirement. If you're taking out $100,000 a year, typically you're paying around 20 to 25K in taxes on that amount easily, right? So think $100,000 you want after taxes. In order to get that amount, you have to take out around 125K to 130K. If you're paying taxes now on 130,000, right? If you think you're getting around a 15, 20% marginal tax rate, and you're looking at a pretty hefty price there on the tax side. Now, on the flip side of that, if you had some other accounts that were tax-free or a brokerage, you can plan accordingly, keep your tax bracket lower, and keep yourself more in that 12% tax bracket, where now you're going to probably pay half the tax compared to somebody who's taking all their money from a 401k, 10 to 15K compared to 20 to 25K. It's a giant difference over a 20, 30-year retirement. You're saving $200,000-300,000 just on taxes alone because you saved the right way. So when looking at this, there's a ton of things that you can do around tax planning when it comes to retirement if you're already there. And the big thing there is planning beforehand. Even if it's a year beforehand, it's better late than never and you can do some stuff that I think can make a really big impact on your retirement going forward. Now, the other thing I kind of mentioned, around tax planning in general, is if you are a very high earner, so you earn a lot of money in your working years, there are things you can do that help reduce your taxes even further, right, outside of 401k plan, right? And this actually can help on the retirement side as well. So if you're someone who is making $3, $4, $5 million, $100,000 a year, $1 million a year, there are some strategies you can use if you're a business owner to help reduce your taxes by a decent margin. So 401k is definitely the first one, right? You can do a 401k plus a profit sharing plan. That typically can get you around $60,000, $65,000 a year. You can put away pre-tax and not pay taxes on that money. Now, if you make $500,000 a year, you might want to put away more than that. Maybe you're a couple years from retirement and you want to start stocking away into a retirement account. You are limited on that front. Now, there are other options, and people don't even realize there's other options you can save into. So you can still do the 401k, still do the profit sharing plan, but on top of that, there are other plans you could do, defined benefit plans, like a cash balance plan, like a 412E. There's a couple of things you can do where that lets you put in a lot more money. And the older you are, the more you can put in. So it's the perfect investment for someone who is older, in their 50s, early 60s, and people in their 40s too could work as well, and you want to catch up on your retirement, and you don't want to pay a lot of taxes. This could be a great strategy to do. So you can put, if you're 60, 65, you can put 200 to 250 grand a year away pre-tax on top of your 401k. So that's 300 grand you can put away pre-tax. If you're in a 30-40% tax bracket, let's call it 35%. I mean, you're going to save, just on that alone, you're saving over 100 grand in taxes. You can do that and do that every year for a couple of years. Goes into an IRA for you. You can lump sum it out, right? Kind of like a pension. You can either take like an annuitized payment off that dollar amount, or you could lump sum it into an IRA, and now you have access to that money. You can do what you want with it. So definitely one strategy. If you don't know that strategy, look more into it. I'll talk more deeper on a later podcast. But that's it for today, folks. Hopefully you enjoyed it. A little all over the place. We're going to get this a little more concise as we go forward on the podcast here. But the main point of it is to keep you informed on what's going on in today's market, what's going on in the news, give you some insight on what I'm seeing today, what you should be looking at, and also give you some financial advice on different planning objectives that I talk about with my clients all the time that you get to see now on YouTube and get a little glimpse of what it's like to work with me and work with any financial advisor, frankly, and what kind of planning goals or planning strategies you should be thinking about.